Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. D2C skincare brand Foxtale has secured $18 million in its Series B round of funding led by Singapore-based Panthera Growth Partners, along with participation from existing backers Matrix Partners India and K Capital. The company ended FY24 at 172 crore rupees in GMV sales.
Fintech firm Credible bags 30 crore rupees in debt funding from SIDBI to scale their operations and extend affordable financing solutions to MSMEs and women-led businesses in India. The startup plans to extend its financing scope to a wider portfolio of businesses, including those led by women.
Insurance first BNPL startup FinSol gets 15 crore rupees in a bridge funding round led by Unicorn India Ventures and C Fund. Funds raised will be used for setting up an NBFC to scale lending operations.
Wrecker Club unveils its latest credit offering, Wrecker Scale, for financing Series A, B and beyond startups and SMEs with a revenue of 40 crore rupees and above. The platform will offer debt financing of up to 100 crore rupees, targeting sectors such as SaaS, tech, e-commerce, manufacturing, EV, D2C, agri-tech, among others.
Shah Rukh Khan's Tara Jawan's music composer Anirudh Ravichandar has joined South Indian filter coffee and snacks brand VS Money & Company as co-founder and brand ambassador as it aims to expand presence and grow market share in Tamil Nadu and Karnataka.
India will surpass the US as the country with most software developers in 3 years, says GitHub's global CEO Thomas Domke. Expects generative AI will evolve into what Jarvis was for Iron Man. That's an exclusive.
Students using AI chatbots to cheat in exams, beware. Coursera has a new tool to help universities verify your answers and catch plagiarism. The global CEO of Coursera explains how this works.
Today, we've hit a huge milestone. Young Turks, India's longest-running show on startups, has turned 22. The journey began as an idea to provide first-generation Indian entrepreneurs a platform. 2 decades later, Young Turks has become one of the largest communities for Indian startups. We have featured innovators, budding entrepreneurs, and put the spotlight on companies making a difference. You know, Shruti, it's been such a great journey, and you've been a part of it for almost 15 years, right?
Absolutely. A little more than that, Arundhati. But yeah, it's been a phenomenal journey celebrating India's startup revolution. We would like to thank all our viewers for being a part of this. In fact, the who's who of India Inc. and the startup world have taken to social media to congratulate CNBC-TV18 on this incredible journey. From Biocon's Kiran Mazumdar Shaw to Paytm's Vijay Shekhar Sharma to Kunal Behel to angel investor Lloyd Matthias, they've all acknowledged the work Young Turks has done to inspire the younger generation and give startups the right platform. And here's a throwback to 22 years of Young Turks.
Hello and welcome. You're watching Young Turks, the show that puts the spotlight on 2 young achievers. I'm Shireen Bhan. Watching the Young Turks Dream Deck marks the beginning of our 11th year. We turned 12. For 13 years, we brought you some of India's hottest entrepreneurial stories.
On stage in front of about 500 odd people said that I was the universal mother for Young Turks. Now, I should have been upset, but I really wasn't, because I feel a strong connection with the people that have been featured on this show.
Time flies when you're working on a great idea with the sincerity of purpose. We began our journey on Young Turks 22 years ago with the idea of creating India's largest platform for first-generation startup entrepreneurs. Today, we have created one of the world's longest-running programs on startups and entrepreneurship. We're so proud that we've been able to play a part in creating India's startup ecosystem, and we can't wait to see how India continues to drive forward as a formidable startup nation.
And what a great 22 years Young Turks has had. But moving on, Foxtale, A D2C skincare brand raised $18 million in a Series B round of funding. The round was led by Singapore-based Panthera Growth Partners and also saw participation from the company's existing backers, Matrix Partners India and K Capital. The fresh funds will be used to expand its digital footprint and introduce new categories. My colleague Shilpa Ranipeta caught up with the founder, Romita Mazumdar, to talk about the new category expansion and the company's growth trajectory. Take a look.
This is a Series B round. We are raising roughly $18 million. This round is being led by Panthera Growth Partners and is also seeing participation from both our existing investors, Matrix and K Capital. The whole intent of the round is to be able to raise money as we move into expansion across categories, as well as penetration into the current channels as well. So that's primarily the round concept.
What about the existing skincare range that you already have? What are the plans there? Are you looking at, adding more products or adding more categories within the skincare range?
In terms of expansion, we are just in the next couple of months also going to move into body care. It's a very adjacent category to skincare because at the end of the day, it's skin itself. It's just that we are going beyond face care. So that's on what is planned for this fiscal year. In terms of current skincare portfolio, you will see us adding a little more, but we are fairly in a good position with 18 SKUs in our kitty and almost 10 of them growing more than 20% month on month. So there's a lot to do with the current portfolio itself. So in skincare, we expect to penetrate this further.
You mentioned body care. Run me through what the idea behind it is, why the expansion into this adjacent category, and what are your plans there?
So with body care, we say, if you look at when we launch, you will see the tagline, and I'm saying it loud for the first time outside the organization is, we say, works like skincare, feels like perfume. With body care, where you have a lot of brands, and it's not just today, you have incumbents for the longest time between soap and body wash, which is a shower gel, and body lotion, who've been at various price points. We as a R&D first brand, someone who understands skin really well, think of body care not very differently from face care. For us, that's also part of the skincare regimen. Whether it's detanning, whether it's undergrowth bumps, whether it's pigmentation on your skin, right? Whether it's your elbows, your knuckles, they are more pigmented than the rest of your skin. Over the last 2 years, we've been able to work on a technology that really works on your on the efficacy when it comes to skincare problems across the body. Of course, the way your face reacts to things because it's exposed to a pollution more is very different from the way your body reacts, and hence it's very easy to actually take very specific problem statements and be able to really focus and solve for it. And that's what we've done with body care. What we are doing truly differently is taking that DNA of R&D, that DNA of efficacy and demonstration-led efficacy. It's not that we say, yeah, this is going to work. We say that this is going to work in X number of days or X number of hours. And that's what something that we've been able to extend into body care as a portfolio, without compromising on the fact that, it has to give you the right, self-care moment when you are using it. It can't be something that smells bad. It can't be something that, doesn't make you feel good or doesn't want you to go back and use that product. So we've been able to really balance that, extend that sense of, a good self-care moment, but at the same time give outstanding results while using the product. So we are taking a benefit first stance there. We're only going to take specific Indian body care as a landscape, and we've done an incredible job. The R&D team has done an incredible job of solving it, and hence we say Foxtale's body care range works like skincare but wears like perfume.
I want to understand the growth trajectory of Foxtale. If you can run me through, what's your annualized run rate been like, or, what was the revenue for FY24, and, any projections that you can give me in terms of where do you see the business growing in the next couple of years?
Shilpa, we've grown from between fiscal year 23 to 24. We grew roughly 10x. We grew roughly, to a gross revenue level around 175 CR. The coming year, we'll expect to grow another close to 200% in terms of revenue in the coming fiscal year. And all of this has been on the back of better profit margins. And that's something that the team has done an that where growth has come with profitability and not in the absence of it. So yeah, that's been a growth trajectory.
But have you turned profitable at an operational level yet, or what are the targets there?
We've turned profitable post our marketing expenses. In terms of EBITDA, we are expecting to hit over the next 8 to 9 months.
Romita, how do you see the competitive landscape currently? Because we're seeing so many skincare brands, right? And celebrities also launching new brands every day. And terms like clean beauty, organic beauty, this is the trend. But for Foxtale, really, how are you setting yourself apart? Where are you getting that edge from?
Really, for us, what works is been the fact that you build something that's relevant for the Indian consumer, which means a problem statement that she is seeking a solution to. Do the best job when it comes to giving that solution. So efficacy is not just the term we use for marketing. It's actually a DNA that we've been able to build on the R&D side. And third, do it innovatively, right? Do something that can get, and because innovation draws eyeballs, but eventually what draws love is if your product ends up delivering on the promise it made. And in fact, 50% of our revenue does come from repeat users. And that's one of the biggest reasons that our website by itself is also profitable and is at such a high scale that it is. So for us, in a very fragmented market, it means it's a good thing and a bad thing. Of course, there's competition, but that also means that users are constantly looking out, right? So you don't have, I'm not doing category creation. I just have to get their, eyeballs. And then once I gain their trust to buy it for the first time, I just have to deliver on it. And I think that's where we do an exceptional job of giving products that actually work. And that's what's resulted in the growth. And that's going to continue to drive the story going forward.
Well, that was the founder of Foxtale, a D2C skincare brand that is now looking to turn EBITDA profitable in the next 8 to 9 months. Moving on the hot seat today, we put the spotlight on AI-powered low-code test automation platform Testsigma. The venture recently raised $8.2 million in funding led by Mass Mutual Ventures. To tell us how Testsigma enables users to rapidly create, manage and execute end-to-end automated tests for web, mobile apps and APIs. Joining me now is Rukmangala Kandyala, the founder and CEO of Testsigma. Also with me, Arundhati. KR, welcome to Startup Street. First, tell us the pain point that you are solving, and then if you could elaborate on your offerings and your tech edge, tell us how your AI-driven low-code solution enables clients to release softwares faster.
Sure. Thanks for having me here. Over the past 2 decades, development processes and efficiency have improved drastically, but testing has always been left behind without much of innovations. Hence, you'll see longer test cycles and they become bottleneck in today's processes. So this is mainly due to the age-old practices that we follow in testing. And at Testsigma, we want to give our testing teams the edge so that they become enablers and releasing software faster than being a bottleneck. Now, also, testing has always been owned by domain experts and business analysts, right? And but the current practices are built more for technical teams, not so much for the actual testing teams. At Testsigma lets the quality engineering teams automate tests through low-code test automation platform, so that Testsigma customers are able to automate at speed and scale via low-code test automation. And this enables them to test at least 10x faster and release it like at least 10x faster in their softwares.
All right. Hi, Rukmangala. Arundhati here. If you could talk to us about your target audience, right? Is it only the big enterprises or are you also catering to MSMEs as well? Also, tell us the kind of efficiency you bring in, especially in terms of saving time and costs, which then overall affects, revenue as well.
Yeah, so we are not just for SMBs, like we are more of a mid to mid enterprise product. So that's where we can help the most. And we have been a global from day one. Our biggest source of revenue comes from North America, and these are like a mid to mid enterprise, little matured companies who would need matured processes and systems in place to release faster softwares much faster. Yeah, and testing time by at least 90%. and cost by 70%. That's what we have been seeing with our customers across the board. And more importantly, faster time to market now. So they can easily save 30% of their overall time to market.
All right. So you're saving 30% of the overall time to market. But KR, Testsigma has also unveiled a new product specifically designed for the Salesforce ecosystem. Elaborate on how the new offering enables Salesforce developers and administrators to accelerate automated Salesforce testing. If you could give us an example, and also tell us the efficiency again. Is it the same that it brings in test development speed compared to traditional testing methods? Again, it's 90% on time and 70% cost.
Yes, it's even more with Salesforce because it's more domain specific and particular to one domain, right? Where we could do even better because we picked one particular problem to solve more deeply. Right? And yes, we recently added Salesforce testing to the platform. Our vision is to build this as an operating system for quality. Eventually, we'll have all vertical minded solutions as well to solve these problems more deeply and thoroughly. And coming back to the point that I was talking about, so like testing is more of a domain expert's business, right? And for testing enterprise applications like Salesforce, especially like Salesforce, Oracle, ServiceNow, and these kind of applications, we need thorough domain expertise. With the current tools available in the market, it requires both domain expertise and technical expertise, which is very, very hard to get, right? And we don't get people with both technical and domain business expertise. So we built up a simplified process or a platform which can enable domain experts to test faster. As I said, like it's even faster than like the 70% that we had seen with other platforms that we have.
Right. If we could quickly come to the fundraise now, how do you plan to allocate the $8.2 million that you've raised? How will the funds help you boost your Gen AI expansion plan?
Yeah, so we've always been like an inbound company. We get like a massive traction through our inbound channels, and we grew really good in last couple of years. And as I said, like this revenue is mostly from North America, which is 80% from North America and Europe. We feel like it's the right time for us to invest into US go-to-market. So we're going to set up teams in North America and Europe. So that's one area where we're going to invest heavily into. And the other areas, like we've been like investing in R&D to enhance our capabilities, the platform capabilities with generative AI, of course. So we'll be investing in these two areas more, like R&D with Gen AI and then GTM in North America.
All right, KR, let me throw in some quick facts. IDC predicts that by 2028, Gen AI-based tools will be capable of writing 70% of software tests, decreasing the need for manual testing. The report also mentions that by 2028, natural language will become the most widely used programming language, with developers using to create 30% of net new applications. So clearly, the potential is huge, but how do you plan to grab a bigger share of the market?
Absolutely. The potential is massive here. And so our vision is always to build an autonomous test automation platform, right? The first step is to build test automation platform, and then we want to make it completely autonomous. Even before Gen AI became popular, we started this company in 2019. We started with this AI vision, right? And we wanted to build this natural language programming based test automation platform. That's been our approach. With generative AI, it actually improved this further and made it even simpler for our customers. And we clearly have the first mover advantage here, and we have pioneered a natural language programming approach. So we're going to continue investing into that, right? And so we are also among the top 3 players globally in terms of the traction. And we just want to continue keep building this momentum and traction, and we'll continue to invest in building this world-class platform, provide the great world-class customer experience.
All right, KR, we've completely run out of time, but many thanks for joining us today on Startup Street, and wish you the very best for all your growth plans.
Thank you so much.
On that note, it is time for us to head into a short break. But are you tossing and turning at night, or are you curious about your sleep pattern? Well, Wakefit's got your back with their new AI-powered sleep solutions. Stay tuned as we fill you in with all the details for a good night's sleep.
Welcome back to Startup Street. How can artificial intelligence transform your sleep? My colleague Ritu Singh caught up with Wakefit's co-founder to know more about their AI-powered products. Listen in.
Direct-to-consumer sleep and home solutions company Wakefit today announced the launch of 2 of its AI-powered sleep solutions. The company, which started out as a mattress-only online brand, has now, of course, expanded into furniture and other accessories. It has an offline presence with about 65 stores, which it is adding to every other month. The company is eyeing a turnaround and says it has already turned profitable as of FY24. For more about this launch and the company's growth plans ahead, I am going to be speaking with its co-founder, Chaitanya Ramalinge Gowda. Chaitanya, thank you very much for speaking to CNBC-TV18. You've launched these 2 Zen's AI-powered sleep products. Tell us about, how big a part of your product launches is AI going to be? What kind of investments are you making into the technology, and how large will the pipeline be? We've seen the 2 products launched today. What's next?
Thanks for having me, Ritu. Yes, the Zen's AI-powered range is the next big thing at Wakefit. As you know, we moved from mattresses to accessories to then furniture, and this is the 4th sort of a big launch that we have. And over the next 2 years, we hope to launch a lot more AI-powered products. So any product that impacts sleep quality is going to be part of this AI suite. And like today we launched 2 products. One is a mattress temperature controller, and the second is the sleep tracker, which is contactless. Both are AI powered, both are using proprietary algorithms, and these are really make in India products which we built from the ground up. So we hope to add more products in this.
Will that require a significantly larger investment? Your last round of fundraising was in Jan 2023, a Series D round. Does that capital continue to last you, or will you be in the market to raise more then?
We are profitable as a company. We were always profitable for the first 5 years of our existence. So we are now back to that. And for us, investment does not start with capital. Investment always starts with the strength of the idea and the people behind it. So even for this product, you won't believe that it wasn't money that got us here, let me assure you. It was the brains. So we put together a really, really good team just in the last 12 months who created this from the ground up.
You do not require raising any more capital at the moment?
We hope not to. Okay. We hope not to because the capital that was raised is still with us. And as I said, we are profitable, so we don't dip into those reserves. We run on our own merit.
But since, Chaitanya, your FY24 numbers have not been made public yet, and you say you're profitable, should we assume Wakefit has come back to profitability after that year of losses that you'd had to report because of the large investments you made in the furniture business?
You're absolutely right. We put up India's largest furniture factory, spread out over 600,000 square feet, and it's completely automated. We brought in technology from Europe, Asia and America, and that not just was the capex, but also the running and learning of that took us about that 1.5 to 2 years. So now we are back to profitability, and like you rightly said, we've not yet finalized or published, but your assumption would be correct.
And in terms of top line, I know earlier in your interviews you've guided for 1,100 crores of kind of a top line for FY24. Are you on track to achieve that, exceed that?
We will not be achieving that number, but we will be beating the profitability numbers that we have taken for FY24.
All right.
And for FY25, we are again chasing the 35% growth on the top line.
Where is the bulk of this growth coming from? As we understand, 2/3 of your revenue is still coming from the mattress business, but you say the furniture business, which is about 25% of the contribution, is also growing fast. So what are the biggest legs of growth for you at this point?
Pillar number 1 is furniture. Like you rightly said, furniture is just a 2-year-old business, very small base. So it's growing at 50, 60, 70% depending on the category within furniture, while mattress is growing at a different pace. It's a more mature, it's a 500, 600 crore business. So that's growing at a different pace. But the second big pillar is omni-channel. So 2 years ago, we did not have the retail muscle in our company. We did not have a retail presence. So now we have about 65 stores. So that's the second big pillar. Third is we have always under-invested in brand. We feel that word of mouth, our product quality, that's what has gotten us here. Now we hope to invest more and more in a steady manner into the brand world. So those are the 3 big pillars that we feel are sustainable. Nowhere are we saying that it's going to be an unsustainable sort of a fly-by-night growth for 6 months, 12 months. These are all sustainable pillars which you continue to put your head down and execute. it will continue to give us growth hopefully.
And you say you have 65 stores already and you're growing at a fast pace. What is the eventual plan? You think you'll need a stronger retail offline presence for the kind of products you sell, or you think focusing on the online sales bit itself is sufficient?
No, I think omni-channel is here to stay.
Especially for the products that you're in the market for. Yeah.
Very, very clearly we see that when we open stores, the same consumers come and buy more products in the same transaction because they're comfortable talking to a salesperson, touching and feeling it.
Yeah.
And they also come as a family. So if you stand in front of our store and observe, a car will stop and 4 to 5 people from 3 generations will get out. So the grandparents, parents and kids. So that's the reason omni-channel is here to stay. So there we will continue to add more stores, and we don't worry so much about online versus offline. We worry about being present wherever they want. So it means if it's in tier 2, it has to be a shop in shop, sure. If it is in a tier 1, you need to be present in a large mall, sure. But the idea is to identify those locations and be present where they are.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching.